Robinhood stock has dropped 42% in just a few weeks, presenting a possible opportunity to buy the dip. At the latest price, Robinhood has a market value of $35.3 billion. With $4.3 billion of corporate cash on the balance sheet, the enterprise value is $30.6 billion. Revenue over the last 12 months comes to just under $3 billion, with $1.4 billion of net income and $1.4 billion of adjusted EBITDA. So the stock is now valued at 10 times revenue, 25 times earnings, and 22 times EBITDA. There's no question that Robinhood had a fantastic 2024. Total revenues increased by 58%, adjusted EBITDA grew 167%, assets under custody grew to $193 billion, and the company bought back $257 million worth of stock. But perhaps most impressive, the company managed this growth without increasing operating expenses, leading to an impressive adjusted EBITDA margin of 48%. And Robinhood continues to build at a rapid pace. Over the last 12 months alone, the company has rolled out a new desktop platform, launched futures trading, acquired custodial platform Trade PMR, and expanded into Europe. It now plans to expand into Asia, roll out prediction markets, and acquire crypto exchange Bitstamp. Looking at the latest update, you can see how the company breaks up its revenue across transaction commissions and interest income. Net interest income at $1 billion was 37% of total revenues. Options trading commissions was 26%, crypto 21%, lending 8%, and equity trading 6%. So Robinhood has been a clear winner from rising interest rates and booming markets, and it looks like Robinhood has room to increase its take rates in crypto. So Robinhood is firing on all cylinders, and the company's operating leverage is allowing it to bring in big profits. But that said, there are some issues to consider. The first is taxes. Robinhood benefited from a tax reversal in 2024 of $350 million. Account for that and net income would have been under $1.2 billion, taking the PE ratio above 30. In fact, now Robinhood is profitable, the company will have to start paying taxes at the standard rate. The second much bigger issue is that all of Robinhood's revenue streams are vulnerable to a change in economic conditions. A recession would likely lead to lower interest rates, which would put pressure on the company's net interest income. Lower stock and crypto markets would hurt investor sentiment and